Right, yo. It's the 4th of January 2023. We're looking at the Euro US dollar on a 1 hour time frame. I've got the 1 hour outlook on the left, a 1 hour outlook on the right. They're identical charts. The only difference is the drawings that I have on each side. So on the left hand side, I've got my buy side drawings. On the right hand side, I have my sell side drawings. I'm currently in two longs right here, and I connected beautifully with one 5 hour trade over here. And we'll go and talk about these. So let's have a little look at the higher time frame outlook. I was honestly looking for a sell continuation. Um, this is the 1 hour, right? So just to back up a little bit, we had this mitigation up here. If you're unfamiliar with this, um, this gray box or anything like that, you're gonna have to go back on my other videos. This is called a sell primary, and this is what I'm expecting to hold price. We mitigate up here. If you actually look to see what it mitigated a lovely 1 minute sell primary. So continuation, right? So there's a sell primary in here, it mitigates, and then price continues lower. Now, due to the fact in the way in which it's sort of mitigating away, I am expecting this to be run. This looks causey, looks like creating cause. It doesn't have to come back now. Of course, it can come back a lot later. It's just it does look like cause, and so that's something we have to sort of identify, talk about, and notice on our charts. There is an incredibly strong 1 minute block somewhere in this area that initiated the prices lower. I believe this will have a reaction. I don't know how much of a reaction, how little, how much. I don't know if they'll blow through. I don't know if what will happen, but it's somewhere around here. Again, we don't need to look at it. We talked to them in detail about it yesterday. So, what was I thinking? So, as prices come down here and got to this point here, it was definitely a transitional, right? Because what's a transitional? A transitional is when it's an order block that basically was over here, range, initiation, break structure, like it ticks all the boxes to become an order block, and then price comes back to it after blowing through it, right? So we blew through, but we didn't mitigate it. And so it's some unmitigated portion in here. And so when they came back up, they came to mitigate it. Now that's a transitional order block. The transitional block it mitigated was a buy block, I believe. It was a buy primary, and it was very strong looking, and it had weight. It held price multiple times. So as price came back and blew through it, we were expecting that this could actually hold somewhat because it held price a lot of times over here before initiating. Remember, we're on a 1 hour chart, so that's quite massive. So my anticipation was that we would have a reaction and could totally trade short from it and get a decent reaction. I actually thought we'd get a break of structure. We didn't get the break of structure. We just came lower because they wanted to create higher prices from here. Remember, we don't know what they're planning and what they're playing around and doing. All we can do is see what's going on and observe price action and go from what we've seen over and over and over again in the market. And so what I've seen over and over and over and over again in the market is that when we stop in a position like this, after prices blitz through it, that becomes a transitional. Other people call them breaker blocks, things like that. I call them transitionals. They always become liquidity. Look on your charts if you don't believe me. They will always become liquidity. It's just a matter of when. I'd say about 10% of order blocks that go transitional will actually hold and cause lower or higher prices, right? You can look on a monthly chart just to see if that's true or not. For instance, I think there's like only two instances on the EU monthly that I could even find that were transitional that held price and initiated away with a break of structure. Okay, so that was my sell bias. And so I've woken up to see we're initiating higher prices. What the heck's going on? Why are we initiating higher prices? It doesn't matter, but let's have a little look. Why did we initiate? Where did we initiate from? How are we initiating away? These are all valid questions. And then I see this little guy in here. Range. Was it this guy here? Maybe it was. Maybe on the lower time frame. Anyway, there's a range in here. It breaks structure. They come back and they take the liquidity and then initiate higher prices, right? So any kind of activity in here, we're very interested. So what's this all about? Huh? This little low right there. they're obviously stacking cause for a future mitigation. Is it going to come now? Is it going to come later? We don't know. There's liquidity basically both sides. There's reasons both sides. So we've got reasons to come below this low, and we've got reasons to become to go to hit price higher than this. This is a transitional. This is a transitional right here. Transitional mitigation. Mitigated something on this side of the screen after we'd blown through it. Let's jump down then to our lower time frame, which will give us a bit of a better sort of insight as to what's going on. Actually, I believe that now, after seeing what I'm seeing, unless we're going to mitigate out of this block here and bounce, it does look like we will be lower prices from here. Okay, so I'm going to talk about these trades. Now, there was a break even, a loss. These two have already turned into wins. I've already taken profit off them, and they're break even. And this one was a full 5R, so, or 5.35R. So I've had a good day, and we'll talk about them. I really want to talk about the sell the most because that was like literally the best trade of the day. But we should start somewhere. I guess here's the right place. So we're on our buy side right here. I've got a 1 minute chart up. Excuse me, there it is. And so what I always do, I jump to like my 5 minutes first. I like to jump for something higher time frame. So I bring up my 5 minutes and sort of see where are the buy primaries, and I identify all the buy primaries that I can see on the market and in my on my screen. As I'm doing that, I'm looking to how we connect, right? I always want to see this kind of thing, an order block connect in to another order block, but primary connects to another primary. Remember, this one formed within this one, so nothing needs to connect to this. And then, as you can see here, here's another biprimary that connected quite nicely into here. So we're looking for a connection. This is what I'm looking for. If I'm buying, I want to actually see buys from here. So we didn't get that. Instead, we got a mitigation of something. And I wrote this as soon as I saw this. I go, the mitigation looks like cause. It's not a primary mitigation. It's a fake one. Let me show you what I mean. Range, initiation, break of structure, comes back in, takes liquidity, and then initiates out. This is the where they mitigated, right in here. So this is the sort of activity that they're thinking of mitigating, right? Or wanted to mitigate. But this is not a primary. This did not break structure. This range here did not break structure. And the one that took liquidity really just didn't take liquidity after the breaking structure at all. It did take the low here, but that's all it did. So it has weight. It's an order block by all means. And so absolutely you should be thinking that this could have a reaction of sorts, but what type of reaction is unknown. And so in this instance, we got higher prices that couldn't break structure. Okay. Why? Because I believe that we're stacking massive cores. And so why do they always want to do this? Because we're wanting to bring price down here into this level to have a bounce, not in here. This is created for cause, created for the purpose of cause. That's all I can say about it, right? Created for the purpose of cause. We have no clue it's going to do all of this. If I have any clue about that, then I'm buying long all day long. But I can't guesstimate it. I can't guess it. So after it's initiated from here and we understand what's going on, this is where I'm sitting on my hands all day because it's kind of like, well, what are we creating? What's going on? And so I'm just observing, are we creating primaries? Here's the first primary saw, a range, break a structure. They came back in, took liquidity, initiated away, right? So it's a beautiful looking primary. So what happened between the B and the C leg? Nothing really. There's just something in here. Okay, so this is where we expect the price to react from when and if we do come back down there. Okay, then we initiate higher prices. We come back in, and it lands inside of a buy primary. Awesome, but it did not create a connector. This is not a buy primary right here. If you look left, range, initiate, higher prices, doesn't break any kind of structure, not even this little guy up here, right? No break in structure. And remember, we're on a 1 minute chart, so there should have been at least a break. There's no break. Again, they created this, what I'm calling a fake range, a fake out. It's for cause. This is a causular excuse me, this is a causula, I'm making up words now, causula range. The goal is to initiate lower prices, I believe, than here, than this level. So as price is still initiating away, I'm seeing this and I write to myself, correct place to land. But this does not go on to create a buy primary due to structure, giving me a bias for shorts. Okay, so they created something that was fake. And now I'm understanding that, okay, we're creating cores, and I can sort of see the market creating something in front of my eyes, yet I still don't know what, right? I just know that I'm potentially going to be going short soon. I don't like how this is going. This isn't how I see price initiate away. I would like to see a price initiate away from over here. By primary, these two create inside. So my first trade, the buy, right? So as we've come down into here, I'm expecting this to be the range that we play from. Why? Because this is my B to C leg, and in the B to C leg, this was the range that got created on the way out of it. So this is where I expect to have a reaction from, right? So we actually ran through it, and when I've seen them do that, ran through that liquidity, typically we can still trade off of this. We can still go long. It's just that they were using this as the cause. Now, I need to do a little bit more studying because it could actually be that once we break these ranges like this, that the odds then are that this whole range will fail, right? And if that is the case, we're going to find out. This is something that happened on ES just recently on a higher time frame outlook, and it's pretty interesting to see. Oh shit! It's just gone 11 a.m. That means FOMC meeting results are out. So that's pretty much why this has failed, and we should see now a good initiation. My guess is down here, maybe just to this one, have a reaction, or if we can see if we can get down to here. So that's what's going on with the buys. So I enter longs, go down 15 seconds, see my entry. So I see that what we're doing here, I can see that we've taken liquidity from beneath this range and we start halting price and get a reaction. If we're going to take out this low right now, then what's the purpose in mitigating anything here? As you sort of look left, there's really nothing spectacular that stands out about this tiny small little range here. This is what we should have mitigated if we're going to have a fierce reaction. But since we didn't and we took out the liquidity in full, there's no more liquidity to take, in my opinion. So that's why I went long. So I jump long, I get taken in on market entry, and my target was actually up here. The target up here was interesting because I was looking at the market in this way. I was thinking to myself, well, if we're creating a buy primary, the actual primaries, do you see that? How it doesn't connect? Like, let me get that perfect. See how that doesn't come back to 50%? Very important. That means that this is the actual range. So this is the range, comes back to 50%. This is the range, comes back to 50%. So if I was convinced of shorts, that would have been a great target, a great stop target, take profit, I should say. But I honestly thought this was the range, and then this was the range high. So I'm targeting the range high, not 50%. And the range high for me was up here, a nice little 8.5R. So I was quite interested in that. Didn't pan out, but I went break even. So this was a nice protected trade. Then I'm thinking to myself, well, look where we're bouncing from. And look at the reaction. We have had a reaction. They've taken all the liquidity. All the liquidity in this range has been taken. Therefore, this has to be the low. This has to be. If we're initiating away, this has to be the low. And so all I'm waiting for now is I'm still expecting us to come up above this line and break it. So as we're having a reaction out of this order block, I'm thinking to myself, well, as long as we're not creating a sell primary, I'm good to go. I didn't see any sell primaries form in this area, and so I'm able to enter the market again when I see us dip into a liquidity pool, right? So remember, this is the low, and as we're creating, we've got a range initiation, and they initiate higher prices. They then come down, they create cores first, then they come down and initiate again higher prices. So I'm like, here's my new low, right? And so As I see this new low being put in right here, I'm thinking this to myself. This is how we're transacting, right? This is the kind of thing. And so with this as my low, I can enter, right? So I enter limit, and unfortunately I get taken out on this one. This is a full 1 hour loss, but I get taken out of it, and I'm not too worried about it. I'm just thinking to myself, okay, it wasn't the right time. Maybe it's lower. Well, let's see. As soon as they've taken the liquidity from this range here, right, from below this range, I'm now thinking that these buys have completely failed. See, they can take liquidity under here. These can become liquidity. That's no problem. They can take it right there, bounce, no problem. And that's what I was expecting after this failed. I was still expecting longs, and I was expecting to come from here. So we analyze it, right? And so let's jump over to my right-hand side of my screen, the sell side, and I'll show you exactly why I took this trade. So once my buy had failed, let's push that over here. So my buy had failed. Immediately, I realized, well, if the buy has failed from there, then we could potentially be going short, right? Because we've taken out, or we're working on taking out, this range, right? This is the range that's getting taken out. And if my buy isn't going to hold, then that means lower prices are on the cards. And if lower prices are on the cards, I got to go short. So where do I go short from? Anytime I see liquidity taken from either direction, right? That's what I'm thinking. So I see liquidity taken from the low here. That was my stop loss, right? I'm stopped out, bummer, whatever. As we initiate these higher prices, I can see we're just transacting shorts, range, initiate, lower prices, range, initiate, mitigate, continue. Same thing again, range, initiate, lower prices, comes back in to mitigate. There's no need to keep coming here because they've got an idea of lower prices. This is what they want to do. So I enter short. So now I can get the buy off of here. So I enter short, right? Here's my last known sell primary up here. I enter short from here. Why do I put my stop here? It looks fucking amazing. I've seen other traders do this. They're fucking horseshit bullshitters, is what they are. I've seen them have charts like all fucking the live long day like this, and they'll pull their take profits down. Yeah, sure enough, they might leave their 2 pip stops on, and they'll leave it like that. And what they mean is that this is the potential for that trade that they could have gotten, and they leave it on their chart like that. So when they do a video or whatever they're doing, they leave it looking like this, and so you're tricked into thinking, oh my god, these guys are the goats of all goats, they're the kings of all kings, how can they be so accurate? Well, they are fucking horse-shitting bullshitters is what they are, and I think you'll find that 99.999% of traders out there who make videos are absolute fucking bullshit, absolute horse-shitters. Do not fall for it. If you're in a early place in your journey, my advice to you would be to learn as much as you can on your own without needing the guru's advice. Get in front of the chart, start clicking buttons, buy and sell, start trading on a small account, lose your money. It doesn't matter. Get used to clicking, get used to looking at the markets. This is what you're going to be doing for the rest of your days in this industry. So start now. You need time on the charts. You need to understand the market movements and why it moves the way it moves. Real quick, I know I'm ranting here, but I just wanted to point out that this has now been violated. This buy primary by that little wick, so I'd absolutely call shorts out in a strong fashion right now. Now, don't get me wrong; they can bounce, they can take liquidity all the way up here if they need to. They can even take the high, but this load is going to get ran for sureties. Like that, that's as clean as it is. We're not connecting anymore. They're pulling price down, and we're going to come down to here. This is the one that I thought would hold. The fact it just got slammed like that in that fashion tells me this is where we're going to hold and get a nice bounce. Anyway, where was I? Okay, so this was the bullshit one, right? So this is someone I'm not going to call them out their name or whatever, but I've seen it so many fucking times. It pisses me off because it's like you're just creating trash in this industry. Anyway, so this trade here, why am I thinking here's my profit target? Well, this is the clue. This is the clue. Here's the last large buy primary that didn't connect, right? And you can see it from my um, buy side of the screen. You see I've got all of these primaries identified. We're working on one another. Boom, 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 right? And so if my buys have failed, then something's happened. We've mitigated something, although I didn't like this mitigation one little bit. I do think this is cause. Um, so even though that mitigation could be bullshit, could be just cause, we're the fact that we're taking out a primary, right, tells me that we're going short. First of all, so if you take out these primaries, then we're definitely going short. Take out this low, we're shorting, right? And so I'm thinking to myself, here is the actual logical buy primary to hold price. This would be the connector. So let's assume that this is likely to be the buy primary and what it would look like, the range and then the initiation from this point. And so I don't want to hold price any longer than I need to. And so I'm out right here. And look how amazing this is. If you don't know about primaries, primary ranges, you can call them whatever the hell you want. I don't know what other people call them. I came up with this. I don't know any. I discovered this myself. Okay, I've been given clues like, hey, look for when price takes out liquidity. These ranges are strong. I've been told like that. But I've never seen people understand them in a way that I understand them. And so look at this and look at this. How you think this is bullshit? Look at this. Look at this touch. Look at the touch. Look at where it touches. It's touching over here, right? Everything I've been taught is look left and look at the last known bit of price action. It's going to react from there. There's going to be an order block. Sure enough, there's probably like a 3-second order block in there, and oh, it reacted. Big fucking whoop. They're reacting from primaries. We move price from primary to primary, right? That's how it's done, and it's the higher time frame primary wins out all the time, right? The larger the one that they create, that's the one that will hold. So that was my profit target. Boom. What happened? I actually had it, maybe, yeah, I think it was there, maybe just a tick or two above it. It didn't really matter. Boom. 5R immediately, right? And I was just like, excellent trade. Now, hindsight, whatever. Could have gotten a 10R probably, yeah, just then. But I didn't like my entry position. I knew I was going to get a bounce from here and potentially even long. So for me, very, very happy with that sell. So let's talk about those buys then. So as I'm seeing, and I've already been taking profit, right? I've been taking profit and I'm seeing this. I can understand that price is already by this point. As soon as I see some buyers come in and step in, I already understand that we're probably likelihood is that we're going to go bring us back up to another sell primary before we initiate lower prices. So I didn't see this as a sell primary, whatever it's mitigated here. I don't see that as a sell primary, but it is a mitigation of sorts. So we'd have to do a little bit more analysis to really see what they've mitigated. You can see this is now the mitigation that's actually occurred. So maybe there was a slither in here. I believe there might have been something like that was sort of unmitigated. I don't know. It doesn't sort of really make sense. You know, they pulled up, taken the liquidity from it. And so I wasn't really expecting the price to stop there, is what I should say, but it did, and price can do whatever it wants. I believe this will become cause. So anyway, I enter long literally as soon as we take out liquidity. I'm just looking for a liquidity grab, any liquidity grab, and I'm going long because I believe in the weight from this range, and I can see what's going on. I can see we're already range initiation, break of structure, comes back in, mitigates again, range initiation. I'm thinking to myself, well, whatever ranges we're creating right now are likely to be for liquidity purposes, right? These sort of mini ranges in here, they have to sort of to reverse price. We need to MS first of all, right? Change market structure. Fuck, I've forgotten what MS stands for now, but basically just change direction. And so anytime we took liquidity, like here, I entered, got a reaction, and I'm thinking to myself, are they going to do it again? Let's try it. You know, I reduced my risk. I'm thinking, let's try it. Boom, double whammy, beautiful, beautiful, beautiful entry here. Zoom, zips up. By the time it's up here, I've got a profit target of somewhere up here. What am I looking for? A 13R and an 8R. I'm literally just going above this high. Not too worried about the actual profit location on these. It was just like trying to take try and take the highs out. And as soon as we get this initiation away, I'm break even. And then I started seeing that there was this sort of momentum shift or shifting of something in this area. And so I started reducing my position size. So I took out, I think, 50% on one of them and about 65% on the other, right? So I took out, I think, one right at the top and then another right around here as markets start pulling back more. I'm happy I did that for obvious reasons because I caught that high before they took me out. So that was a couple of good trades there as well. Not really sure exactly on what the R return was, but it's is what it is. Maybe 2R or 3R or something like that. All in all, or more. Not so certain. I'd have to figure it all out. But yeah, they were my trades today. I really enjoyed them. It was a fun day, and it's 11:16 a.m. So it's a good time to stop trading for the day. Would I have held this? Would I want to have held this? No, absolutely no way. I'm happy with that trade. Really happy with it. I really do think we should be coming back into some sort of sell primaries, but to react from. Remember, we've got this one right here. Look at this. Look at the stop right above it, right? So it's like, okay, it connects to here. It makes sense, but oh, you know what? We could see it differently as well. Oh, it's you could see it as a connecting range. I don't know. There's lots of ways of interpreting this data at the moment. So we're just gonna stop trading there for the day. A good day, interesting day. Lots of interesting price action. Caught a few trades. Whoop de woo. Hope you guys are smashing it. Hope you're enjoying your trading session. And aloha. I'll speak to you tomorrow. Take care.